The weekly RSI is suggesting a mid-January to early Feb breakout. Could this be the spark that initiates a macro reversal? Let's go ahead and dive into the charts. Okay guys, welcome back to the channel. Thank you for tuning into today's video. We're going to go ahead and take a look at Bitcoin today, particularly focusing on the weekly RSI, as the RSI is approaching its apex and nearing a potential breakout point which should occur between mid-January and early February based on where the trend line converges with the RSI on histogram. We're also going to take a look at short-term price action and briefly update on the market data and the broader markets. Before we get started, smash the like button, hit the comment button, and subscribe to the channel, and join our Telegram channel, which you'll get access to via the second link in the pinned comment description down below. You'll get access to all of our charts, analysis, videos, information, and a whole range of more stuff in here, as well as polls, altcoin analysis, and of course we do have our VIP sale coming up on the 29th of December. This will be a New Year's sale, so go ahead and join the channel. All the information on that sale will be posted on the 29th of December. In the meantime, you can find all the membership details and trading track record over here. Let's go ahead and jump into the market data. So for the month, currently a Bitcoin is down 1.91%, moved up a little bit from that negative 2.1 yesterday. We've seen a little bit of fluctuation in the price. For the quarter, we're down 13.26% currently, and for the week, we are down, it looks like we're up 0.57% for the week, but again, not a lot of price action throughout the times of December. We're taking a look at December over here, we're at negative 0.1%, a 2%, and a 0.5%. So we haven't had a lot of movement in terms of historical price fluctuations relating to December this year in 2022. It has been a very, very neutral and more or less sideways month. A month of very low volatility as per our 30-day volatility chart, and of course, very, very low volume as per our liquidations. So let's take a look at the broader markets. We'll keep today's video nice and short and sharp as it is Christmas tomorrow. We don't want to be holding you guys too long today. All in all, the DXY is still very much in the same spot as it was yesterday. We're underneath that horizontal resistance range, which you can go ahead and see by this gray box. For a continuation upwards, the price will need to reclaim and push above this gray level over here. If we are able to do that on the DXY, we should see a rally upwards on the DXY. Taking a look at the bond yields, we do see bond yields actually starting to rise, which leads me to believe that the DXY should soon follow suit. But we do have some bigger resistances here on the bond yield, such as at 3.8%, as well as on the 2-year, the 4.35 to 4.4%. These are potential points of which the bond yields could reject from and continue to the downside. So we do have to keep our eyes on that and be aware of what's going on over there. Of course, the DXY is generally inversely correlated to the stock market, and of course, Bitcoin is correlated to the stock market by a degree of 0.7. So when the DXY rises, the stock market generally drops, and of course if Bitcoin is correlated to a degree of 70% of the stock market, it is more likely that Bitcoin as well follows suit with what is occurring in the traditional markets, and therefore assessing and analyzing and reviewing the DXY, particularly the direction of the DXY, can help you form biases in which direction the Bitcoin market will go, and therefore the cryptocurrency market as a whole. Looking at the Dow Jones, we are still within that support range, so not too much is happening over here. This is a sideways compression, horizontal support range. Not expecting a lot to happen until we lose this local low to make that swing towards the downside, or of course clear this local high, break through 35,000 to continue to the upside. Until then, anything between this low over here, 33,000 and 35,000, this entire range here, in my eyes, is a neutral zone. This is not a zone of confidence. This is not a zone where I'd be looking to trade. This is a zone I'd be looking to stay out and wait to see what happens. Anything below this level, be looking for shorts. Anything above this level, looking for longs. Moving on to the S&P 500, exactly the same thing. Right now, we are, however, underneath that major horizontal support zone. We are looking for a continuation to the downside of here for the S&P 500 if we do reject here. Alternatively, breaking over 41,000 or 40,100, will result in a break towards the upside. Let's go ahead and take a look at Bitcoin, and then we'll finish up on the larger time frame and talk about the RSI. This is a very, very interesting thing that we want to discuss. So what is happening for Bitcoin? In the last couple hours, since yesterday's video, we've seen a lot happen, but while there's been a lot happen, not much has really happened with the price action. We saw some big wicks to the upside, we saw some big wicks to the downside. Neither of these price movements towards the upside and downside were able to break the current range which we are in between our resistance and our support. Okay, so the price is more or less in a chop zone. What is a chop zone? A chop zone is when the price moves between resistances and supports. Sometimes we can see price move within support. Sometimes we can see it move within resistance. But right now we're seeing the price bounce like a ping pong ball between the resistance zone and the support zone, indicating two things. Number one, indecision in price action. Number two, indicating consolidation. So whilst we have indecision and consolidation, this is probably the worst times to be looking to trade aggressively, as the price doesn't even know where it wants to go. At one moment it can look bullish, the next moment it can look bearish, as we have seen by these long wicks over the last 12 to 24 hours. So what are we waiting for a little bit more confirmation? As we said yesterday, we're looking for the most important thing, which is a 4-hour close above this downward trending resistance. Above this downward trending resistance, a 4-hour close. That will enable the price to swing upwards back into this horizontal resistance range more freely. It won't have that downward sloping resistance hammering the price down. This is of course either a zone where we're going to see a continuation from towards the upside, or get heavily rejected again from particularly the $17,000 horizontal resistance. This is also a psychological resistance. This could result in a move back towards the downside. A very probable scenario. This is a scenario I am more leading towards believing is going to occur. Particularly with the RSI over here, we do have this downward sloping RSI. We can go ahead and ignore this over here. This entire data point is an outlier. This entire data point here is an outlier, although it's a significant outlier. It is an outlier nevertheless, because it was based on economic news. Economic news caused the price to act irrationally and with a lot of volatility. And it wouldn't have happened if we didn't have that news. So we can look at the RSI here. We can see a clear deviation from that downward trending resistance on the momentum chart, as well as the price action, a very clear deviation. So as we said yesterday, this downward trending resistance remains intact. Looking for an upside swing, a 4-hour break, we can expect an upward swing over here. We're expecting that rejection from this level. Excuse me. A rejection from this level would be most likely. Again, looking for a break down below this horizontal support range for the next leg toward the downside. Of course, this next leg toward the downside could be kick-started if this uptrending support line here, which are drawn between these two local lows, is lost prior to the move towards 17,000. So the other alternative is the price gets rejected before we reach this level. We lose this horizontal support range over here, which you can see with this gray box, as well as at the same time we lose this uptrending support line. That would trigger the move towards the downside a little bit earlier before we see a retest with 17,000. So the short term, that is what we're seeing. Let's go ahead and take a look at some indicators on a little bit of a larger time frame, 12-hour chart, see how we're looking, and then let's go into our macro. So for 12-hour chart, look at the moving averages. We're not seeing anything that really pops out to us on the macro that is too bullish, and that is because the moment we zoom out to a little bit of a larger time frame, particularly on 12-hour chart, we are looking bearish. Okay, we have got that massive rejection from that June to November region. We are very much in a downtrend. The trend is looking aggressively towards the downside. It doesn't mean we can't see swing upwards. It doesn't mean we can't see short-term rallies. It just means the trend right now is definitely pointing towards the downside, and we do need to reclaim some of those more significant levels for that trend to start to flip. And that trend flip will only occur once we are able to reclaim this gray box between 18,000 and 18,600, which is that June to November low. Until then, we are very much in a downtrend. So let's go ahead and take a look at that larger time frame, however. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So there's a few things I do want to talk about on this larger time frame. Before we get into the RSI, I do want to go ahead and bring up this chart here. And this is our bear market. So essentially, guys, keep in mind this downward trending resistance here, this downward sloping channel is essentially the bear market structure. This is the bear market. Okay, we have our bear market downtrend, which we have actually broken out of, but I'll tell you why that doesn't matter in a second. And of course, we have our bear market support line, which is this downward trending support line, which we retested in June at the 17,600 bottom again, that June bottom. Moving forward, we have since developed a falling wedge structure. This falling wedge structure has been developing since June. Of course, we've had 2 retests on one side, 2 retests on another side, so we have not actually validated this structure as of right now as a falling wedge. It is more of a theory. For us to validate a falling wedge, we need at least 3 retests on one side and at least 2 retests on another side. So we're 1 retest short of actually validating and confirming that this is without a doubt a falling wedge structure. But what we can say for certain is this downward trending resistance here is still going to be a downward trending resistance. So taking that into consideration, we have developed some sort of structure from within the descending channel, which is expanding out of the descending channel, meaning that we are still within the bounds of a structure that has been developed within the bear market. And therefore, for us to validate and confirm the breakout of this bear market structure, we need to actually break out of this extensionary structure first. Okay, so when will a macro reversal occur? It will occur when we break out of this downward trending resistance. Now, there are a few indicators that can help us assess when that will occur, particularly the 2-day 50 EMA. We're looking for a break over the 2-day 50 EMA. We're also looking for a break over a POC level, which you can see on the VRPV over here on the 2-day chart, which sits at $19,000, not an area of light resistance. This is one of the heaviest resistance points on the entire Bitcoin chart in history. If we go ahead and zoom out, you can see it does chop up a little bit down over here, but if we go ahead and draw a vertical line from this point here, you can see that 19,000 well overtakes that in horizontal resistance, meaning that that $19,000 level is actually the largest individual horizontal resistance zones in terms of historical trading volume that we have actually seen on the Bitcoin chart. The stronger the resistance, the harder it is to break out, the more likely you are to reverse. With that being said, if we break over such a strong resistance, that strong resistance now becomes a basis of support that could potentially facilitate a macro reversal. Now, as I've been telling you guys, wait for that break. Wait for the break over POC. Wait for the break over this downward trend line. Wait for the break on the 50 SMA. And most importantly, guys, the RSI is going to tell us when we have positive momentum, which will enable that potential move to initiate, because the RSI is going to break out of this downward trending resistance before we see any of those above things that I just mentioned actually occur. When the RSI breaks out of this downward trend line, we should then see the price follow suit, and the price follows momentum, and therefore if momentum increases or positively shifts, which we generally see after breakouts, we will see the price rally and potentially push through this $19,000 range, resulting in a macro reversal. I'm going to leave the video there, guys. If you've got any questions, obviously leave them down below. I won't be here tomorrow. It's obviously Christmas, so I hope you all a Merry Christmas. Have a great time with your family or friends, however you celebrate it, if you celebrate it. And of course, we'll see you back on the channel the day after on the 26th. See you later. Cheers.